Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, US payrolls rose much more than expected, reinforcing market expectations the Fed will raise rates at its next meeting. But first, we start today with something we don't usually track. Indonesia's GDP data showed that their economy returned to its pre-pandemic size in the fourth quarter of 2021, expanding 5% from the same quarter a year earlier, as their recovery regained momentum after the setback of the Delta wave in the third quarter. In China, according to the private Caixin Services PMI, business activity is now barely expanding, with momentum slowing to a 5-month low. Lockdowns affected them, but new orders slowed as well. Their employment measure is in fact now contracting in the service sector. In the EU, their retail sales data for December was a significant disappointment, falling from November and rising a very weak 2% from December 2020, when a 5.1% gain was expected. And given that inflation is rising faster, that meant that retail volumes are falling now. And German industrial production slipped unexpectedly in December, and it was a chunky move lower. But if you missed it on Saturday, the big news was that US non-farm payrolls report was unexpectedly positive. The headline gain reported 467,000 and far above the 150,000 gains which were widely expected, and nowhere near the 400,000 loss that what some pessimists had feared. Better, there were revisions, and significant ones, to job gains in November and December, which mean employers added 700,000 more jobs on these non-farm payrolls reports than had been previously indicated, and that's pretty significant. The other positive out of this data is that average hourly earnings increased 5.7% over the past year. It was their largest monthly increase in the last year, and although inflation is high, it shows that wages are largely keeping up. But Canada also released its jobs report for January, and that was not positive at all. They lost 200,000 jobs on a seasonally adjusted basis and much more on an actual basis, and this was worse than 118,000 loss analysts had expected. Their participation rate fell. In Australia, they bounced back with a strong expansion in their services sector in December and January, putting behind it the lockdown contractions of the past 4 months. And the US Treasury 10-year yield opens today at 1.93% and up another basis point to a 2-year high. The price of gold starts today at $1,818 an ounce and up $12. However, oil prices are lower from Saturday by a bit more than $1, just on $90 a barrel in the US, while the international Brent price is now just over $92 a barrel. And the Kiwi dollar will open today little changed at 66.2 US cents. Against the Australian dollar, we're firmish at our lower level of 93.1 Australian cents. Against the euro, we're a lot lower at 57.9 euro cents. That means our trade weighted index starts today at just on 70.6, and about where we were this time last week. We welcome your feedback. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.